Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Monday, March 11th. We're going to take a look at Asana today. So with earnings coming up, I thought we'd come and take a look and see if Asana booms or busts or moves relatively sideways off of earnings, where it may hit some support or resistance or some levels that it might sort of attach itself to. Now, if this isn't obvious yet, I am recovering from having lost my voice. So I'm sorry if it's a little challenging to understand me today or if it just sounds different, but so it goes. All right, a bunch of levels on the Asana chart. I didn't want to clutter it up this much, but there's so much price action in the levels in which it currently exists, sort of like the brunt of levels that it's between, like the 16-ish level and this like 21-ish level. There's just so much price action in there. It was hard to ignore some and sort of, go toward some and leave others out. And so I just erred on the side of including them all and hope that it didn't clutter up the chart too much. But let's start near in. So if it does get a little push here, and who knows exactly where it'll end the day. We're just shy of power hour at the moment. But if it does get a push, 1927 is the first resistance level that I see. 1980, 2008, 2053, 2086. And then if it does keep pumping either, right straight off of the earnings, or it gets a tailwind and keeps pushing in the days and weeks ahead, 2260, 2380, 2043, and 2550. That was as high as I went, but you can see this 2627 top out there before the drawdown, consolidation, and then further sell-off that happened relatively recently. Now, if it does fall, 1856, the Nielsen level, 1790, 1721, 1667, 1609, and then 1569, 1541. Now, if it does move somewhat sideways, that to me would look something like moving probably between about 1950 and 1850. So percentage-wise, that's still a stock of this price is a decent percentage range, like it's a high-ish percentage range. But, stocks that tend to have volatility like this, where it drops over 16%, I guess that was off of last earnings, and it had run up a bit into earnings, a range like that is certainly plausible, but that's what it sort of looks like to me at the moment. Now, on the Thinkorswim side of things, we had back here we had a trigger and fire that set off a counter move to the upper bound, and then that plummet that was heading into earnings, and then drew down even further, and it's been sort of interestingly consistent with retesting the mid-range of the channel, even if it hasn't left the bound. So it briefly left the upper bound here, briefly left the lower bound here, but even in the middle, it's just sort of continuously retesting and retesting the mid-range, which sort of stands out in a different way than many of the other stocks that we look at. Now, we did get a trigger and fire here as well. Didn't really amount to much of anything. Still is basically pinned to the mid-range of the channel. Histogram is real herky-jerky, right? To get some strong bullish momentum and then a pullback, and then a re-engagement and then a pullback, and a re-engagement, then a big pullback. And then sort of a second round of bullish momentum after not even quite reaching the baseline. Now today, starting to put in another larger bullish momentum candle. So, the indicators here on the Thinkorswim side of things, the only thing that really stands out that I feel is notable to me is that it's sitting mid-range of the channel. Channel's relatively wide, spans from 1716 up to 2054. So, those may be some additional levels that play a role. In between that, 1969 to the upside and $18 to the downside. So we'll see if any of that sort of comes into play. But to me, this isn't sort of giving me a lot of, it's not enhancing my vision in the way in which I usually feel the confluence of the Webull chart plus then the takeaway from the Thinkorswim side of things does. And so, I'm left with more feeling like leaning in toward the Weeble side of things. Now, one other thing that I would just point out, it's not quite perfectly developed, so I didn't want to lead off with it, but we do have this, you see this uptrend support, right? I'm not going to put it in just now because it is pretty nascent, but if that does continue to take shape and we get up here, like just above 20, maybe 20 to 2050, something in that range, we could start to see something like an ascending triangle start to get put in, or what we sometimes call a flat top, where you have consistent selling in this range, but you get uptrend support that's going to collide with that previous selling area. And sometimes you can get a nice bump through a sell wall and get a nice push through it. And it can really sort of be an explosive move. So whether that will develop or not, I don't know. Again, it's pretty sort of, in the imagination more than concretely on the chart as of yet. So we'll see, if or how any of that plays out. But it would take some additional price action getting put in order to make that happen, and would be sort of very quickly thwarted if there is a large move. Like if we, get a big gap down because of sell-off, or a big gap up because of a push, then obviously that's going to throw that off kilter. So again, various reasons why I didn't want to necessarily start with that. For now, there's, to me, enough levels in here that I'm going to sort of lean on those for the time being. All right, folks, hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.